Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I wanted to cover a really solid company by the name of Hewlett-Packard. This is a company that I've invested in, and I'd like to take you through my analysis of Hewlett-Packard and share with you why I continue to invest in this company. Let's take a closer look at Hewlett-Packard. So Hewlett-Packard, I'm going to take it through my 4 questions that lead to one decision on my part. I like to scorecard my investments. And the first thing I want to know, is it an industry I want to be in? Is the company operated and performing well? Is the balance sheet in good shape? So is debt less than 3 times EBITDA? And I want a discount on this stock, which leads me to a decision. Would I buy additional shares in this company? Or if I don't have shares in the company, would I begin to buy shares in a company? Hewlett-Packard does a really nice job in their earnings releases, and they really provide a really good investor package. Check it out on the website. I wanted to highlight a few pages from that packet. Their fiscal year ended already, and I'm reporting full year fiscal year 2022 numbers here. But it really shows that the revenue has been flat, year over year, just slightly grew. And that's understandable. They had some pretty good boom years in 2020, 2021, since everybody with COVID and restrictions and lockdowns, everybody needed a PC to get on Zoom and do their work. So not a lot of growth reported, but really solid profit, real solid cash flow. So those things really showed up, and this is a really solid company. Again, I really like their package because it really, for a value investor, they are really focused on growing shareholder value in the form of free cash flow, and they're buying back shares. So both things, they're doing quite well. Those are just 2 pages out of their investor package that you can check on their website. Outlook for this current year, they're already in fiscal year 2023. They're going to be profitable. They're going to generate free cash flow. But again, sales are going to be flat. As one could understand, we're heading into a recession. Not a lot of PC sales are going to happen, as well as the other products that they sell. So they're going to be a solid company that's going to pay a good dividend, but not going to grow much. So how do I value Hewlett-Packard? I updated my evaluation of Hewlett-Packard. I'd like to take you through that. So first, I changed my growth, both short-term and long-term growth. I'm going to put it 2% just to be conservative. Updated my weighted average cost of capital, 9.3%. This is a really solid company, been around for a long time. They have a low debt to EBITDA ratio of 2.36. That's excellent, really solid company. I reduced the free cash flows. Their forward guidance, and it might be conservative, was $3 billion to $3.5 billion. So I took the midway point based on the guidance they provided. So I'm going with $3.25 billion of free cash flow expected in fiscal year 2023. And then each year going forward, it'll grow at 2%. Based on that factor and the discount rate that I'm using, it comes up with a valuation of $41.6 billion. And the market cap for the company is 27. So it offers up a discount of 47%. So a really attractive company, pays about over a 3% dividend, and you can get a 47% discount. So looking at Hewlett-Packard stock for the past 12 months hasn't been pretty, down 26%. The NASDAQ hasn't been pretty over the last 12 months. It's down quite a bit, more than 30%. So I think these guys are, kind of following the market where stock valuations are down, and it could be a good opportunity to buy. When we look at the 5-year, you can see that Hewlett-Packard just not too long ago was trading quite well. If you bought into Hewlett-Packard in the mid 2020 timeframe, you'd have done really well. I've been investing in Hewlett-Packard for some time, so I look for opportunities when it comes down to buy in, because they pay a really good dividend, And then once it rises, the investment looks really good. So quick review of the analysis. Revenue is flat for Hewlett-Packard. Good free cash flows. They had $3.6 billion in free cash flow in fiscal year 2022. They have a 12% free cash flow yield, which is very good. Dividend of 3.8%. Great dividend. And that dividend is pretty safe, in my opinion. Revenue will be flat, in 2023. Free cash flows from 3 to 3.5 billion. And Warren Buffett's an investor in Hewlett-Packard, so that's good to know. My outlook for the company, it's a really great company and a stock to own. They're very well managed, just a really good company. And I think there's moderate upside and a very good dividend involved in investing in HPQ. So I'll be buying more shares and adding to an already large position in Hewlett-Packard. So just scorecarding HPQ. It's an industry that I'm in. Hewlett-Packard is that one PC, peripheral, electronics, consumer products company that I've invested in. This team that's running HPQ is one of the best. Just very good team. Debt under 3 times EBITDA. Great. It has a discount, and I would absolutely buy more shares. In fact, I bought more shares today. So thanks so much for watching the video. I hope you found it interesting and you learned something about HPQ. Just a quick reminder, this is for entertainment purposes only. I'm not recommending you buy any particular stock or security. Good luck in investing in 2023.